Welcome back, and joining me now to share his commentary on the day's market performance is Ntsika Ntsokolo from Sasfin Wealth. Ntsika, happy Thursday. Thank you so much for joining us today. Let's start with the SARB, right? Holding rates steady, even though there was room for a cut considering where the rand is at. What caught your attention in particular there? It did seem like a dovish pause.
Good evening, darling, and thank you so much for having me on. No, certainly to your earlier point, I think there was enough data out to speak to a constricted environment that would have justified a cut at this point. So I think me and my colleagues were slightly surprised. We usually follow the US's scorecard. So after the US held rates yesterday, I think we expected much of the same. But I think certainly within the South African context, we've met our inflation targets, and I think we were perhaps hoping for a bit of relief for the broader consumer in order to be able to actually access these markets at these levels.
And let's talk about that Fed rate decision in greater detail. The Fed Chair, Jerome Powell, did seem a bit more hawkish when you compare the two statements, pointing to a strong U.S. economy and diminished risks in both inflation and employment. Does this suggest that wait and see mode will be held for a little longer than markets had anticipated?
I think certainly so. I think everyone has certainly priced in, I think, about at least 2 cuts for the full year, and we expected the first one to come early this year, justified on the back of, a tighter, constricted environment. But I think the dynamics around the geopolitical situation, what we're seeing, at least in somewhat, is still a robust bond market within the US, but some fears around the contagion that could happen with the weaker dollar finally falling through to fixed income and perhaps affecting other parts of the economy.
All right, let's get into some corporate action. U.S. markets in the red, the Nasdaq taking the biggest hit. What is going on? Some tech earnings out and markets not really liking Microsoft's numbers. Is it the moderation we're seeing in the cloud unit?
No, certainly. So within the Microsoft universe of reporting, I think although Azuri came out with a stellar number, I think around 29%, it was still slightly slower sequentially quarter on quarter from its third quarter number, which was around 40%, I believe. And so I think people just worrying about the uptake and whether or not the competitive environment that, the broader cloud environment has become now with competitors such as AWS and some independent providers such as Oracle and the like. So I think the entire landscape shifting quite a bit and continuing to be quite dynamic, and perhaps showing itself in the hawkish nature of some of these announcements. Meta came out with a beat in terms of its results, and what was rewarded by the market by I think a 5% or uptick. But to your point, Microsoft slightly lagging its peers at this stage, and I think it's around the acceleration as you spoke to around that cloud business.
Let's bring it back home. Muli is out with an update, forecasting earnings growth of up to 12%. It also noted growth in all its divisions, but being punished today. How are you making sense of that?
It's a tougher cookie with Woolies. I think if we're all allowed to just purely invest in the Woolworths food business, I'm going to be a 10% position across all our portfolios. I think it becomes a hell of a lot trickier when you start thinking about the dynamics around Country Road and its Australia business. I know that its home and healthcare business actually did do really well in this period that just passed, but we are still slightly concerned about what happens with Australia and if that unwind continues to play out in the manner that we expect. But again, I think 6% a bit more of a punish than we expected. Look, like for like, if you take the sale of the Australian property business, I think the business is down closer to 30%. You strip out that once off and you get the 7 to 12% number that they're announcing. But again, I think very tentative times, and if you can see the follow through in the sale of other stores like Foschini and Truworths today also being sold off a little bit.
And that was going to be my next question, right? We did get an update from Mr. Price yesterday. That company was also punished. Just that NKD acquisition aside, I'm wondering whether investors are expecting these clothing retailers to fare better, as we have seen household consumption being strong over the past year, right? Or are we seeing perhaps the dynamics of the Chinese competitors coming into play at this point? Some of these retailers have also pointed to online gambling eating up consumers' discretionary funds.
Darling, I think that's an absolutely brilliant point. I think as South Africans, we completely underestimate the ubiquitous nature that, Betway and all of these other gambling providers have actually come and put onto the normal consumer. And again, it goes directly to discretionary spend. And when, a gambling addict is now deciding between bread and butter situations versus, the chance of doubling his money, we've seen who the winners are. And again, South African government looking hard at how to maintain this or how to police this through legislation and all the rest. But no, it's a very tough environment. And to your earlier point, I think some of the statements coming out of Mr. Price speaking to an almost oversaturation or fully saturated exposure to the South African consumer discretionary spend and why it's now looking to look for growth overseas. But certainly the market never liked this NKD purchase. And again, the business they're purchasing is loss making in absolute terms. So very tough for investors to stay positive about that one.
Tough times for investors, and I doubt that you're seeing any value in retailers. Take me through your stock pick.
Okay, so my stock pick today is actually Glencore.
Okay.
I think on the back of their full year results, as you alluded to, although full year numbers were down about 11%, I think the acceleration that we saw out of that copper asset and what it was able to achieve in the second half of the year is something genuinely to look at. And if you look at the copper price today, jumping another further 10%, I think up to about £6.5 or $6.5 per pound. I think that copper story is only but beginning and will continue to bolster and push up all of the diversified investment case.
Yeah, let's leave it there. Ntsika, thank you so much for your time and taking us through markets action today. Now that was Ntsika Ntsokolo from Sasfin Wealth.